It's about that time of day again. Welcome to your nightly newsletter, boys and girls. Joseph James here. Wednesday evening, April 8th, 2015. Did we have some fun today? See, days like today are the reason why we love being traders. Yeah, there are some days where we don't get everything to work out the way we want it to, but boy, oh boy, if you're not having fun in these markets of gold and crude right now, we better find you another day job, because this is the good stuff right here. This is what we live for. Big moves in our favorite markets today, and I wish somebody would have saw them coming. Now, maybe we'll make some sense out of these markets. In tonight's newsletter, crude oil is bearish just a little bit this evening after moving $4. That's right, $3 up and $4 right back down. That should tell you something right there. We call it the OPEC fade. So we move $4 off the highs from Tuesday. We have a bear channel and a clear trading range to work with. And our focus, can you guess? Our focus tomorrow is going to continue to be selling resistance. And we've got $50 a barrel in our crosshairs for Thursday. Will we get there? We'll have to see here in a moment. How about the gold? The yellow metal is bearish this evening after filling the holiday weekend gap and retesting the big round number of 1,200. I really didn't think we were going to get all the way down to 1,200. Just a little push lower, though, and there we were. We have a bear channel to work with, and we have a ton of just tasty resistance levels overhead that we're going to use for tomorrow. 1,200 continues to be an easy target. If you were with me anytime in 2014, you know how easy that 1,200 becomes as a target, and we can't wait to get another crack at this funny yellow metal tomorrow morning. As you can see, we have a jam-packed newsletter for you guys and gals this evening. Before we begin, though, don't forget, I teach all of our students here at School of Trade how to create all these charts and how to use these charts to profit every day in our live trade room. I also want to remind you to make sure that you're watching this video on our trading blog. Yeah, I know many of you are watching it on our YouTube page right now, and that's a great place to be watching all of our other trading videos. But I've got 3 reasons why, if you're watching this video over on our YouTube page or anywhere else that may be hosting this video right now, make sure you follow the link below the video. It'll take you over to this trading blog for 3 reasons. First of all, you can download all of my charts for tonight. Every chart I'm using tonight, you can download those charts by following that link right below the video. Yeah, the one that says download today's charts, that one. And then, of course, upper left-hand corner, I got a free pass for you to come out and join us in our live trade room as a guest. How cool is that? You're going to learn more with me in just about 90 minutes time than you will anywhere else on the web. I can guarantee you that. I get a free pass for you if anybody out there is not a member of School of Trade and curious what it feels like to be in our live trade room. And of course, yeah, there were 3 things. I have a nightly newsletter email list. That way, you never have to worry about missing another newsletter again. All you need is your name and your email address, and I'll send you an email conveniently right around 8 p.m. Eastern Time, Monday through Thursday. I don't do it on Fridays. They actually let me out of my cage on Friday afternoons. Anyways, 3 reasons here. First of all, download today's charts, grab your free pass, and register for the mailing list. If you get off my screen, if you get off distracted there. Sorry about that. If you grab the free pass, if you join the newsletter mailing list, don't forget I'm going to send you a verification email. So make sure you check your inbox, your outbox, your spam box, junk box, whatever the heck you guys have there for your email systems these days. Make sure you check all the folders because there's going to be a verification email in there. And if you have any trouble, we're always standing by here 24/7 to give you guys a hand. Alrighty, deep breath, deep breath, deep breath. You get your helmet on? I've got my helmet on. I took my mouth guard out, though. You don't want me to do the news with mouth guard on. But make sure we're ready to rock and roll here. How about the gold? Starting with the yellow metal. Most gaps get filled. This was no different here, right? We saw the holiday weekend gap. We came all the way back down, and you know, we pretty much knew we were destined to get down to 1,200 at some point this week. I didn't think we'd get it all in one shot, but we definitely did. Hey, we'll take it. We'll take it. So easy profit there on the gold if you just simply followed my guidance this week so far. So we're bearish this evening after filling the holiday weekend gap. We've retested 1,200. We have a bear channel to work with. Yeah, that's what that is. A bear channel to work with. And we also have that trading range. Now, this trading range gives us some nice, tasty targets waiting for us down to the low side, right to the upside here. So again, using those areas of support below, those are going to make some great targets there. 93.4 83.7 on the way down. And, you know, we always know in a downtrend, in a bearish trend like this, we're going to wait for price to come up and then whoop, right back down. So we're going to keep focused on selling at a premium, selling at resistance, selling the rips, right? Buying the dips in a bullish trend, selling the rips in a bearish trend. We get the BMT there at 1206, right? As I'm recording this right now, we're kind of chugging around this 1200 level here. Our goal right now, in case you guys have missed the last 6 months of my newsletter, whenever we see 1200, the goal is always back to 1200. Okay, it's pretty straightforward. We go up, come back down, right? We go up, come back down. We go, you get the point, right? We come back down. So we got all these areas overhead here. We're going to keep looking for those selling opportunities. Now, later on this week, though, we may get a chance here to get down, you know, get up in that 88.1 area, 83.7. So wouldn't be a bad idea to hold a runner here, right? Up and back down, hold a portion. The problem right now, though, is we didn't even see, the markets didn't even blink today with those FOMC meeting minutes. Tomorrow we've got the jobless claims tomorrow. I know. Jobless claims right now are about as useful as the housing market reports back in 2008. You know, they're not really that useful right now. Really, the most important thing tomorrow for you gold traders is going to be if we see any real big changes in the U.S. dollar, right? That's going to be the big thing. We get a lot of Fed speak the rest of this week here. So again, take it carefully down to 1200. Hold on to a portion of it. But again, 1200 continues to be our magnet here for price. Go up and bring it back down, and hopefully we'll get a push here. Hold a little portion of this down to this 93.4, down to the 83.7. You heard me say it already. All right, there's my strategy there. There's our plan there on gold, and you'll notice the price action chart. This gives us a lot more detail. People always ask me, why? What's the difference? What's the difference between this chart, right? These are JJ bars. There's a hybrid between range and Renkos. I like these charts because it makes it really easy to see the structure of the market, right? You can see the highs, the lows, but with that convenience comes a cost, right? Remember, you pay more for a gallon of milk at the convenience store than you would at the local big box store, right? You pay for the convenience. Well, the convenience sacrifices and what you get from these tick charts is you get the open, high, low closes. You get a little bit more detail. Now remember, too much detail is not a very good idea. So there is a balancing act to this, and this is part of the game that we play here as technical analysts. And I'll teach you all of this stuff as a student here at School of Trade. Remember, you're not going to do this on your own. But the bottom line is that's why I use these tick charts. I don't really like to use time charts, right? If you were to open up a time chart right now, this thing would look, it would be gross. Right? It'd be difficult. I like tick charts. They look better. They give you more information, and we can use that information to make certain assumptions and find additional levels of support and resistance. To make a long story short, nothing different on this chart really. We have a bear channel here, but look what we have here though. This actually gives us a little bit of a clue as far as a channel inside of a channel, right? If this is Mr. John Henry here in our community here at School of Trade, he hangs out in our chat room all the time, by the way. You've seen his videos on our blog, right? Our chat room is probably the best chat room on the planet. But Mr. John Henry would call this a multi-tiered channel, right? A multi-tiered channel. I call it a channel inside of a channel, potato, potato. It doesn't matter. We're still bearish. But definitely be on the lookout here, though. We have a break right there, right, of this bigger channel. And you can see here, it looks like the sellers have tried once. We're probably going to get a measured move, you know, something like that, back down again. The only question that I have for you is, how high do we go? You know, I would love it if we get up around this 06, 08, maybe even as high as a 12.12 again. Difficult to say how high we go here, but we're definitely expecting another measured move. So unfortunately, I know I'm pretty good at anticipating, but I can't fast forward. I can't grab the DeLorean and Marty and go into the future here. But what I can tell you is that be ready for a measured move target down here. So what you don't want to do is be trying to sell somewhere down around these lows here, right? After the measured move. So that's the stuff I know for a fact right now. So kind of AB, if it goes CD, then you know you're pretty much toast right here, right? But if it happens to go lower here overnight, then you get a little more room. So just make sure you're aware of that measured move coming on down. And again, like I said, I hope we go back up here. This would be where we get the best selling opportunities and bring it back down here. But just be careful. If we do roll over here and you miss it, make sure you kind of count backwards and think, okay, measured move. Okay, don't sell right there. Wait for it to come back up and then sell it again down. Okay? So it's going to be, the way it looks right now, it may end up being like a stair step, right, on the way down here. Again, I don't know how high we're going to go here overnight before we come back down. But tomorrow morning, though, I'll be looking at this in real time in our trade room, and we'll know then, right? We'll know then. So all I can do is what I can do right now. Keep focused on the sell side, and then, of course, you got some great targets waiting for you, 97, 92, 91, 82, okay? And don't forget, there's a little sneaky little trading range in here, right? Trading ranges are pretty easy when you use the moving average. You know, a lot of people ask me, what indicators do I use on this stuff? You're looking at it. I use knowledge, right? That's pretty much the only indicator you need. Your old brain, your old noggin, right? That's the best indicator you need. But this moving average is really helpful when it flattens out, right? Kind of gives you a little bit of a tip off. There's a range there. And so that's giving us a couple more areas of support to work with down bottom. Definitely look for that 92.4 to 91 even before we snap back here. There's multiple levels of support down here. And then you've also got that low of that long-term channel. So if you find yourself down here tomorrow, consider it job well done. Take some profit out of that. Buy yourself a good bottle of some aged grape and enjoy the rest of the week. All right, let's get going here on crude. How about the crude? What a fun market this was today. Got a little bit slow start, right? A little bit low volume start. It was frustratingly slow. That's the way I would describe it, right? We kept trying to go up and kept trying to go and then finally, right about 10:15, right before 10:30, the whole party started and it was just bonkers on the way down. This is why we love trading ranges. This is why we love trading ranges. If you were wondering where this party was going to end today, it was staring us right in the face the whole time, right? I had guessed, if you remember last night, my guess was we were going to end up somewhere down around that 50-50, right, 51 to 50-50 area, and it looks like we had a successful anticipation of that today. We've got a long-term bear channel, so we're bearish this evening. Yeah, count them up, guys. That's $4 off that high. That's I'm sorry. It's $3.50. Who's counting? We'll round it up. $4 off that high pretty much from Tuesday. We see a bear channel. We have a trading range. Now this bear channel is pretty interesting because it gives us a level really, I mean, you've got to be drooling over this area right here around 5150. 5150. Why does that number ring? Oh, right. That's where we started this stinking week off, right? That's where we started this week. Wouldn't that be fun, right? Back to 5150. Again, this has been happening. We've seen this area many, many times already. Heck, it even got stuck in the mud once again. So, coincidence? I don't know, guys. I don't know. Back at the top of the channel, we got a sell zone up here, 5176, 5160. If you look closely, 5174 is the BMT. It's about halfway right back into that trading range. You know, if I had to guess right now, I'd say that's where we look pretty darn good to take another swing at this sucker. And again, using that trading range, we've got support waiting for us down below. You know, I'll tell you, it took a lot of restraint not to say 49.54. In all reality, really all we have to imagine $50 a barrel is going to be the easy target here. But, you know, I would assume if we can go to 50, we can go another $0.50 down because that'll be the second leg down for that expansion support, right, waiting for us there. We had expansion resistance overhead. That's what got the party going lower. Expansion support down below. So, again, you know, $3.50 off the high. Excuse me, I better change that before I get hung on stock twits. But anyways, we got the jump up, and we're expecting price to continue. I have no idea how high it's going to go. I don't need to know. I don't need to know how high it's going to go. I'm not blindly selling these areas, but we're definitely going to be keeping an eye around these resistance levels overhead here and looking for. Now remember, this is really important, guys. There are two ways to get short in a bear market. Who's been watching my newsletter? It's okay if you're screaming at the screen. It's okay. I understand. I do the same thing. I yell at my screen all day long. There are two ways to get short in a bearish trend. What are they? Obviously, the first one, right, is a selling pattern, right? A reversal pattern or a continuation pattern, right? So one of them would be a three-point reversal. One of them would be wait for it to start going lower and then wave, wave, wave. That's the first option, right? A sell pattern would be the first way to get short in a bear market. But where's all my experienced traders out there? Where's all the thinkers out there? Where's the easiest money made? I'll give you a hint. When the when the buyers fail. So what you want to look for is you want to be waiting for around these areas of resistance. You could get a reversal, or you could wait for it to make the move and then of course sell those drips down. But the easiest money is always in waiting for the buyers to try and they got me again, right? And then wait for, you'll know it, right? Here's the way I always think about it. I try to think of myself circa 14, almost 15 years ago, and where would I have tried to buy? Foolishly, of course, right? But where would I have tried to buy? And then where would my stop have been? Where that stop would have been, that's where you want to be looking to get in on that failed attempt from the buyers, okay? So either we're waiting for the reversal, the continuation, or the whoops-a-daisy, right? The failed buyers. 50 is our target on the way down. Maybe we get down to 49, 54. We'll see. Tomorrow I will walk you guys through this, of course, in real time in my live trade room. Now here, this chart takes the cake. This was one of the, this newsletter might go a little bit late tonight. This chart really took me a long time to kind of, I almost got a headache. I almost got a headache, guy, to think so much about this one. You can see this ain't your grandma's channel here. This is a tough one. This is a real tough one. I had to really work hard. Take some Advil, right? Get this. I got to make fun of myself here from time to time here. I'm not the smartest guy in the world, but I think really hard. So we got kind of a multi-tiered channel inside of a channel. I have no idea what the hell you want to call this, but the reality is, though, we definitely see a bearish long-term channel, right? A bearish long-term channel. And then we have these little, I don't know what you want to call these, midlines inside here, or multi-midlines, I don't know. I call them pretty useful because you can see they're going to keep acting as resistance. They're clearly acting as resistance. So we see we have a big bear channel, and we have an undershoot of that channel. Now, I'm going to go out on a limb here and say these undershoots, boy, we might be onto something here with these undershoots, right? Because remember, an undershoot, I don't know, the undershoot way back here, remember what happened on this undershoot? Yeah, right. It gave us that area, and then see ya, suckers. Right. So these undershoots, they're no joke. The only thing I have to worry about right now, though, is just staying patient to get up there for that overshoot. Right. That's the hardest part right now. So undershoot of those lows, and guys, I know it feels like this market couldn't stop going lower today, but there's going to be some profit taking. There's going to be some bargain hunting. I'm sure a few people are going to come back on and go, see, I told you we're going back to 100. Okay, we can't keep going down forever. Oh, remember, we can. I was talking about the bearishness I saw last night, and you would have thought people were going to show up to my office with pitchforks, right? The bulls were standing outside of my office. I swear YouTube. I swear OPEC. I swear OPEC is trying to hack my YouTube page right now. Anyways, we know the undershoot here tells us we're probably going to go back up. There are going to be some bargain hunters. There are going to be a lot of profit takers. If you're smart, you took your profit down around that 51, and it just happened to keep going, right? Hey, you can't make all the money. You're not going to grab the whole thing down. Be happy with the money that you made on the way down. So we're definitely expecting an overshoot of that high. Now, it's always difficult for me in the night before to know where that overshoot will be. If you're a member of mine and you're trained on channel overshoots, you know what I'm talking about, right? It has to do with when we break that channel high. Now, if I had to guess, though, okay, and I'm really good at guessing, but I usually have a good reason for guessing. If I had to guess, though, I would say somewhere around this area here. 52 would be, I would say we're pushing it at 52, right? But I would say a run at 52. And the reason why is because this little guy right here. This little guy right here gives me a lot of clues. If you were wondering what happened there at 50.39, well, I'll tell you what happened there. It's an expansion. And we got one more down here at $50. Wait. $50 a barrel? Yeah, right. You couldn't even make it up. You couldn't, I mean, that's so crazy, you couldn't even make it up, right? So the moving average flattens out, find the lows, find the highs, double tops, double bottoms, right? Copy paste, copy paste. $50 looks pretty tasty right about now. Maybe not early tomorrow, right? But like today, later in the day tomorrow. So again, undershoot of the lows. I would expect an overshoot. We take that little trading range, this little gem of a trading range right here. And again, it took me a while to find this thing. And I was like, all right, how far are we going to go here? How far are we going to go? Right? Put the helmet back on. Okay, we're looking like this area right here, right? So this is where you're looking for those buyers, right? Come in, we're going back to 50. Oh, crap, they got me again, right? So that's when you see those buyers fail up here, that's when you know the party's back on. That's when the party's back on. It may roll over and play dead back at the high of the channel. It may kind of undershoot that resistance a little bit, right? But the reality is, though, is be waiting for the price to go up and look for those buyers to try and think about where your stop would be if you didn't watch my newsletter and you were trying to buy it back to 52, and that's where they'll be getting stopped out as well. And then here's another thing tomorrow, just a little bit more of a tidbit to kind of chew on here. And this is another thing, we won't know this until tomorrow morning, but look here, AB. See, I know my ABCs as well. See, I'm a multi-talented YouTuber, right? Yeah, multi-tool YouTuber. Oh, please don't stop, Joe. Stop. You're giving them way too much ammunition in the comment section right now. A, B, C, D, maybe we take this over here, right? Kind of reverse engineer it. You know, look, there you go, right? So again, I'm no rocket scientist, thank goodness. But that would be a measured move, right? Again, $50 a barrel. I'm just kind of speculating right now, but you know kind of where I'm going to be looking at this analysis in this chart tomorrow. All right, guys? So again, I don't know where we're going here overnight. I don't need to know where we're going here overnight. That's the beauty of all this. You don't have to get the whole thing. You get a little piece of this, and you're a wealthy, wealthy person. You get a little piece of this every day, you're making great money. At least enough money to tell that boss man or boss lady, right, to go, you know what. All right, so looking to stay short here on crude. Again, nothing has changed here, right? Nothing has changed here. I don't care what you see on the television set right now. But again, wait patiently here at resistance. And I can't imagine we don't get up at least up to this 51.50 area or so here before coming back down. But if we happen to roll over, again, look for the buyers to try and fail and then use these support levels down bottom, and then come in to see me tomorrow. I'll walk you through all this again tomorrow morning, but we'll have a lot more information tomorrow around the opening bell times. Alrighty? Speaking of tomorrow, I want to remind you guys, we have one of the best free trials on the planet. You're going to learn more with me in 1 week on my trial. I'll invite you into my trade room. We'll take a look at how we trade these. I get a lot of questions every day about my favorite markets, my favorite time frames, how much do I need, what type of computer, right? Guys, that's what I do. I help new traders structure a safe, that's the key, a safe. We're not here to gamble. We're here to actually make a career out of this. I know we all want to make money. But if you want to gamble, go to Vegas, right? At least you get some drinks, some dancing, some music, right? It's a little bit more entertaining than doing it in the markets, right? But if you want to make a career out of this, if you want to make a beautiful career out of this, something you can pass on to your great grandkids, right? I'd like to teach you how I did it. Right? I'm not saying it's the only way to do it, but I'd love to teach you how I did it. And I got a free trial, and I'll show you more in that free trial. And don't forget, we get a beginner course, intermediate course, and advanced course. That way you can learn at your own pace, and you can kind of do this, as you want to. Don't forget, we got someone standing by here 24/7, 365 to answer your questions. And I got to go take a nap. This has been a busy, busy week. Oh boy, oh boy, oh boy. If you're out there on spring break this week, we're sending the kids back to school in just a few days. I feel ya. We've had to wait a little bit for the volume. It's been a little bit low early in the sessions this week, so stay patient with me. I know the kids are out of school right now, so we're almost through it. Stick them in front of the computer, right? Put them to work. I'll tell you, if somebody would have given me some charts when I was a teenager, getting into trouble on my break times, well, I'd probably be hanging out with Oprah and Richard Branson and Mark Cuban on one of those man-made islands off the coast of Dubai right now, partying with glow sticks and stuff. All right? Anyways, teach your kids, be well out there, be nice to each other, and be here tomorrow, 8 a.m. Eastern Time. I open up my live trade room, 8 p.m. Eastern Time. We'll see you guys back here again if I don't fly off the planet Earth here tomorrow. Guys, I'm kidding with you. My name is Joseph. We'll see you tomorrow. Adios, amigos. Bye for now.